Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for one pretty crazy day, Tuesday, and it is the 2nd of August, and this is 2023. So we saw the Fitch downgrade. Now, you realize there hasn't been a credit downgrade since 2011 or 12 when I think his name was De Beers or Beers, I forgot. He was with S&P Global. He did it, and boy, did he get his head handed to him by the public, and now here's another one. I applaud Fitch for doing it. And what they said was, so we all know it if you live in America, our government is dysfunctional at this point. They don't get things done. They fight. They're very good at fighting. They are completely functional at fighting. They are not functional in getting things done. The Biden administration has no policy that I'm aware of. Today in energy, I was cracking up. They decided that they're going to not buy the 6 million barrels right now. Do you know why they're not buying them? There's nobody going to give them a tender at their prices. When prices were $72 to $67 in WTI, they decided we didn't have the facility to store the oil. Then when prices went up, oh no, a month or so later, no, we'll get the facilities, we'll start buying. And of course, the market moved away from them. You know, you can be quiet and not tell the world that you're going to buy oil. And when it comes down to a level, you buy it, and then you say, hey, we ended up buying 3 million barrels at such and such price. I admire that way more than telegraphing what you're going to do. So when they pulled that number, they also took some support away from the market. Now, tomorrow morning, you might as well, during the whole day, get your AnheuserBusch beer out because they report. And we're also going to get Amazon and Apple. I want you to take your scorecard out. Do me a favor. And on Amazon and Apple, write down how many times they're going to use the word artificial intelligence in what they say. I'm going to be looking to see if anybody brings that up. I'm not going to be counting, but that's what you have to do. So, is this the end of the bull market? It is not. Please go to yesterday's video. I said August is traditionally not a strong month. And I said, yes, we had a strong 20 and 21, but 22 went back to normal. And I'm looking for this to be more of a norm. I certainly didn't expect the size declines we got today, but you got them. Okay, I like them. And I like them because I don't think anything's changed. I think we still have a bull market. I don't think it's over. I think the market can waffle here through the rest of the month, ideally. September, October, begin another trajectory. I'm hoping to the upside. We will see if I'm right or wrong. But I'm giving you the overall inclination I have about the market. Now, something here, very important. We're looking at Intel, and I have a thin gray circle that I put on days ago for you. I said, markets, big markets, like to close gaps. Doesn't mean they have to. They like to close gaps. Tell me what this market did. Exactly closed the gap. The trend is up. You still have higher lows, higher highs, until you get back under 33.40. The buy number, as I see it, is 34.29. You got today to 34.28. What? 1 penny? How could that be? The 18-day average. I'm not the only person that looks at this. You're probably not the one that does. Don't get me wrong. Some people use 20-day moving average of closes, 21s. I've seen different numbers all over the board. I like this. I'm more inclined for the zone. This is where I expected the support. If the market's going to hold this leg of bullishness, it should not take out 33.40, and then it should try a rally from here. Where might the market have next resistance if that works? I don't know if it will. If it does, then the 36.26 level, probably a good number to be looking at for the resistance point. But is the market ready to be bought aggressive? No, not completely. It is no longer overbought, but is it nibble time? Might be. That's how I'd look at it, all right? And I do think the nibbling should have been done past tense today. Win, lose, or draw, you got $1 risk or whatever in the market. Rivian, remember when I brought up to you as this was developing this pattern? Bollinger Bands are so darn important, I don't even know where to begin. If you were sitting next to me, I'd shake you. You start seeing them narrow in, It's generally, nothing on life is always, generally is a good high percentage number that the market's losing its volatility and it's going to start narrowing in on the chart. And where do you often go? You go back to the 18-day average. Now, the trend is down now. You have lower highs, lower lows. Where did you close? You closed over the 18-day average, so the bias is still up. You have to close under the 18-day average to get the downside bias. And if it does that, wherever the lower Bollinger Band comes in is where I think the next support level will be. In UGA, you did what today? Any reading over 79 when you have an embedded reading, definition of embedded on my slow stochastics. My formula is different than the standard slow stochastic. Let's start with that if you're new. George Linn, who developed this, was a close, good, technical friend. I had him on a show in the 80s and 90s called Stocks, Options, and Futures. It was the old financial news network, which became CNBC. And I had one of the biggest shows in the country at that point at noon. And you'd call in and ask questions, get things from us, and we had a live audience. I mean, it was fun, and I got to meet everybody. And I learned from him, and then I played with it, and I said, George, I think I have something that makes your technique more interesting because I get these embedded readings over and over, and they tell me to do something. I showed him what I had, and he said, I like what you did. He said, that's interesting. And we talked about it, and I've developed something else. Just recently, I'm testing on artificial intelligence with it, and I'll get some answers over the next 4 to 6 weeks, and that'll tell me another thing. But to make a long story short, you lose the embedded reading, out you go. You're not interested that the next day it comes back and embeds. It can certainly do that. It typically does not. If it does, it's a sign of more strength. If it doesn't, it often leads to price and the 18-day average going to each other. What you don't want to do is get over the most recent high. That would be the risk factor. In XLF, you tell me what we just did. So looking at this market, here's your embedded reading. The market now loses it. This is Friday. The goal's the 18-day average of closes. It shouldn't get up and over that number. I'm pretty happy. That's all I'm looking for. Is the trend down now? Well, the swing line is, but you got to close under 34.94 and you haven't done it. Market went back to a neutral number. XLI, you lost the embedded reading. You're already on top of the 18-day average. Here, turning down, you've got a higher high, lower low in the video. So, will this market go back to the 425, 430 zone where the next support is? That's what I'll be looking at on the weekly chart. I expected to give something back. I have told traders that they had to cut their long positions down, and we may have an actual top in place for a long time in the video. It does not, technically speaking, have to go up and challenge those highs again. But that doesn't mean it's just going to go into a bear abyss. I don't see that at this point. Coin, I am still bearish. Momentum, though, is so oversold now, too difficult to play it. If it can stretch down wherever the Bollinger Band comes in as support, resistance is 97.66, but in an oversold market, I teach people don't deploy new money. In the home builders, all right, you're flirting. I got my eye. Do you see how it's going? I'll do this one. I can hold it. I'm giving you the wink. We're flirting. And we lost the embedded reading. Any reading under 79, time to be out. Objective 18-day average. No, I'm not bearish. It's just time to take money off the table. You can always put it back to work. XLE. Are you going to lose the embedded reading? The work says you're going to lose it tomorrow when you reopen. Doesn't mean it'll be lost by the end of the day. The support comes in between the 200 and the 18-day average of closes. I'll be watching that, but it is not a place I would be deploying new money just yet. In the gold market, how do you get long the miners or the product when you're fighting interest rates that are going back to highs for the year in many cases? I don't think you can. I think that you have to get through. First, the statement by Miss Yellen, that they need $1 billion this quarter, not 700 and some odd billion, but did I say billion? $1 trillion this quarter. I get so confused with trillions and billions. Both are out of my realm. That's what I look at, okay? And that's where we're at. Number two, Fitch came in and called the kettle black. What is wrong with that? It is. We are dysfunctional. They don't know where we'll be as we come up, and we got to get to the budget and set everything again in Kevin McCarthy's position. And we don't attack this crazy spending, and with higher interest rates, that's going to take more money from all of us, and we keep needing more money to just pay our debt. You think that's good? I don't think it's good. And I think they called it the way it should be, and I, for one, like what they did. And I'm very much in a minority. In SLV, lower highs, lower lows, oversold, went to the first support today and went through it. The 100-week average, is it going to pay, 100-day average, is it going to pay attention or drop into the bigger support, 2133 to 09? Wouldn't surprise me that it does that. In copper, I feel so vindicated. I didn't understand this whole rally. I'm not going to keep going into it. I didn't get the rally. The rally was predicated on China going to do something. I read every day. I don't see China doing anything but saying, hey, we are going to help the housing market. Hey, we're going to change the tier 1 mortgages. Hey, we're taking interest rates down 10 basis points. Does that sound to you like something that's going to spur their economy on? If it does, congratulations. I don't think it does to most of us. You need them to come to the market with something big, and I don't think they have the appetite for it right now. They're not getting the world trade they used to have. There's sanctions on them. They're fighting left and right with us. I understand their new trade representative is supposed to now come to America, as we've sent everybody, and it is time to get more talking done and positive things. Can we? Don't know. In TLT, because remember, the lower this goes, interest rates are going up. That look friendly to you as a chart? Now, would I ever tell you to try to catch from that Bollinger Band the rest of this? Isn't going to happen. And you'll say, look at, he just cuts himself off. I understand it. You can put a stop on it. This is how I teach the trade. What about the dollar? I would be telling you to come out of the longs there. And you'll go, it's going higher. I know that's what you're going to tell me. But the odds are against you. Every time you go to this Bollinger Band, you rarely stay over it. You come to the right-hand side of it. Now, the right-hand side could mean you push it higher. But if you think you're going to get over it and keep running, maybe 5% of the time. That's how the algorithm's built. And the flip-flop is true in the FXE. This is a spot to cover shorts. I didn't think you were going this low here or that high in the dollar. I went out to dinner with my friend that's a huge guy in olive oil. And I told him I was friendly to dollar. I'm wrong. Okay, and you got to look in the mirror and say, boy, I didn't make that call right. And I'm not in it for what it's going to do a year from now. I thought the market wasn't going to make this particular move the way that it did. Terrific. What's lost? At the dinner? He was buying it anyways. I love him. He's a great guy. And it's not because he buys dinner. He's a very close friend and very bright. So I look at all this, see what the market is doing. Okay, you put it together, you come up with a game plan, and please, that's what I want you to do. You're seeing these Bollinger Bands. You're not doing anything with them. This course I have is so easy. On a Saturday, you're going to go through all the chapters and get it. You can then keep going over it, and it's going to embed, and you're going to go, oh, I get it. Whoa, look at what it's doing on this stock, that stock, this ETF. Whoa, whoa, whoa. It is a changer. It opens your eyes up to ideas. That's what this is all about. I don't have a magic pill you take overnight and you're the biggest world winner. That I don't have. Do I have knowledge? I do. Can I share it? I do. You can move your cursor up here. You can watch this ad. Please take advantage. I'm Ira Epstein. I will talk to you tomorrow. Have yourself a great day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.